Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 24th. My name's Eric Wilkinson, and yes, you may recognize me from mainstream media as the Wolfman, but what I'm here to do is teach you guys not only how to build an option strategy, but then how to implement that option strategy. Implementation is the key actually to success of any trading strategy, and I talk about the environment, the strike location, and all of those things that go into that implementation process. And hopefully you can pick up on some of that here in the daily market commentaries, but more importantly, those webinars that I do are an hour long, and we dive deep into how to build those things out appropriately for that implementation process. All right, anyway, let's talk about economic data. I've been talking about it all week. Today is the day we get the real economic data to give us the health of the economy overseas and here in the United States. Well, maybe more overseas, because we get their flash PMI numbers, which is the Purchasing Managers Index. That's their most important leading economic indicator. Ours is the ISM, which is the Institute for Supply Management. Yes, we do still get our flash estimates, but it is a little bit after those ISM numbers, so they aren't really necessarily as important. But we did get durable goods orders. That is a major number for us as well. All right, so let's talk about overseas. We got French flash PMI services sector coming in at 52.9, which is higher than the expected 51.6. They did revise last month's numbers down by a half a percentage point to 51.1. We got the French manufacturing sector PMI coming in at 50.5. Remember, on these PMI numbers, Purchasing Managers Index, anything above 50 is expansion in the economy. Anything below 50 is contraction in the economy. And this is the guys that are in the manufacturing sector, the guys that are in charge of forward looking. They purchase the raw materials and things of that nature that come into the manufacturing process. So they are very forward looking as to how the consumer is reacting and how the overall economy is reacting to those types of products. All right, and then we got German flash manufacturing PMI, 41.9. The French and German are the most important aspect of the manufacturing process in the European region. So Germany coming in at 41.9, expected to be 42, is in line with expectations. But let's see, that is like 1, 2, 3, 4, 5, 6, 7, 8, 9. Basically since February, almost the entire year. In January was pretty much unchanged. So this entire year has been below 50, which is contraction in Germany's economy, which is a reflection of the global, or the the greater European area, I should say, because they are such a heavy influencer in that area. So still in a recession and not looking like they are ready to pull out of that one anytime soon. Their services PMI did come in at 51.2, which is above that threshold of contraction and expansion. So they are still expanding on the services sector, but that manufacturing is really the driving force in their economy. Whereas in the United States, we are more of a service sector economy. And then the greater European region manufacturing, flash manufacturing number still came in below 50, coming in at a reading of 45.7, expected to be 46. Still, pretty much in line with expectations, but they similarly are have been in negative territory for the greater part of 2019, January being the only one where they came in above 50, so solidly in a recession still. Service sector, again, came in above 50, but it was and in line with expectations. But again, they are more of a manufacturing sector rather than a service sector there. ECB conference that came out, they did not move interest rates. They are zero, so they didn't go negative, and they aren't about to raise those interest rates because of what we just saw there with the global, or with the European region in a recession. They are not going to raise rates. Raising rates is when you're trying to slow down the economy, and they are not trying to slow it down. They're trying to speed it up. Excuse me. Core durable goods orders coming in here in the United States at a negative 0.3%. They revised last month's number down from positive 5 to positive 0.3. So negative revision and worse than expected slightly on the headline number for durable goods orders month over month. Durable goods orders coming in at negative 1.1% here in the United States, expected to be a negative 0.5%. This is the change in orders placed for the manufacturing sector, and that is not looking good. So, it's looking like we are headed into a recession here in the United States. Again, that's going to cause the Fed to really solidify that 25 basis point cut here at the end of the month. The question now is, are they going to get a little more aggressive? Since they were behind the curve on the raising interest rates, like they raised too fast, too long, and didn't wait for it. Remember, last year I was screaming about it, especially heading into December, to stop raising interest rates. Now they need to maybe start cutting interest rates. But they have egos over there too, you guys, and they're showing that they screwed up. We did get our flash manufacturing PMI. It is above 50 at 51.5, but again, this isn't our major number to look at. Service sector PMI for the flash estimates came in at 51, which is above 50. So we're still showing expansion here, but again, we've already solved the ISM. New home sales lower than expected, coming in at 700,000 units, expected to be 710. Natural gas storages have we gotten the natural gas storages? There we go. 87 billion cubic feet, right in line with expectations of 87 billion cubic feet. All right, let's get on to the overall markets. We've got crude oil creeping higher again today by about 33 cents, right there at the point of control of 56.32. We've talked about this. I believe this is going to be where we start to see crude oil start to slow down to the upside here because we're right between the 2 points of controls, and I expect us to kind of stay there as the market, with the global economy slowing down, you guys, in a recession over there. That shows, and the manufacturing, because remember, crude oil is broken down into several different distillates. Some of it goes into polypropylene, which is the plastic aspect. Some of it goes into our gas, our tanks, airlines and stuff like that. So if the global economy is slowing down, airlines are going to be buying less jet fuel, consumers are going to be buying less petroleum, and the manufacturing sector is going to be buying or using less of the polypropylene aspect of, or the oils that go into making polypropylene. So I think we're at the upper band of it, despite the fact that we did see that major drawdown yesterday, or a much bigger than expected drawdown. It was a 2.7 million barrel drawdown. That was the big move yesterday. Feel like we're topping out a little bit here at this point of control, which is for the volume there. And I've talked about it. I think we're going to kind of build up inside of this area and trade within these areas here, which is between 50 and 55. Yeah, 56 is the point of control. I'm just kind of balancing that out. Yes, we could come up and test the upper bands of it, which lines up with 58 and 59 there. But that being said, 60s I think is way out of the question right now, especially with the way that the global economies are looking, not so peachy keen. And as we're looking at recessions and lowering interest rates here to try and spark some of that demand. Remember, when you're starting to lower interest rates, that's to try and create some demand there. And I'm getting really long in the winded. I'm been really talking way too much. 10 minutes there about all that stuff. All right, gold back above 1,500 a troy ounce. I believe that's, with the interest rates looking like they're going to lower, Fed easy policy, that's going to weaken the dollar. That should drive demand towards those safe havens in like gold. We're above 160 in the bonds there. Again, we're talking about lowering interest rates. I think that the bonds are going to be in that 160 handle or higher for the foreseeable future. Yes, we might dip below that, but we got a Fed that's going to lower interest rates, so it's going to push higher. We got a mixed bag here in the equities. We've got the Dow Jones Industrial Average off by about 34 points, and the NASDAQ, as you can see, up nicely by 67 points. Tech doing much better than the blue chips, which is a bit surprising, but we are seeing that happen right now. And, we're not seeing great earnings numbers either. So, but NASDAQ probably being driven mostly by Tesla, which is up huge today. E-mini S&Ps sustaining above 3,000 again today. Again, overall markets, mixed bag, but we're approaching those value area highs. We should start to see a little bit of the slowing of that pace. We get a 50 basis point cut at the end of the month, we're going to see all-time highs, I can almost assure you. Again, here's the breakdown of the E-mini S&Ps. Market really slapped in the face with those economic data points, not loving all of that, especially those durable goods orders, pretty pathetic. Market slammed down, but we celebrate bad news in these times. They are interesting as well, because as the economic data comes out worse than expected, the expectation is in the market that the Fed might do a little bit more to spur this economy along. All right, without further ado, let's start talking about some of the trades that I've done. Remember yesterday I was talking about Chipotle getting out of this trade. I got out of it yesterday on a bit of a spike. I just had a working order in there to get out basically all day, and I had on the November 730 puts in there. If you remember, I originally sold those for $7.30. I got out for $3.40, so that wasn't $7, $5.40, and got out for $3.40. So I made a $2 profit there on CMG on a bit of a bounce. If you waited till today, it's probably right in and around that area where I got out. Plus, you've gotten more volatility coming out of that market, which was the main factor in that trade for a win. Now, with Microsoft, I actually played around with this. I'm playing around with different expiration cycles with this. I long said that I stick with the weeklies or the shortest duration here, but I've been playing around with some extra duration on these in the case that I am wrong directionally, that it gives me a little bit more time to be right. So with that being said, and of course it worked out with Microsoft, but not so much with the eBay so far. But with Microsoft, I went into the October weeklies. I sold the 130 puts in there for 43 cents. I bought those back for 3 cents, so a 40-cent profit on those. With the monthlies, I went and sold the November, same strike location, the 130 puts, and I originally sold those 130 puts for $1.32 and bought them back for 39 cents. So better profit on the Microsoft for that directional move. That was correct. So that worked out nicely. Now, if we go over to Tesla. Tesla is a trade that I didn't do for earnings, but I got out of my trade for Tesla. And if you guys remember, I had on the D's, and I was long the 225 puts in there. And let me just check what I originally paid for those, because it wasn't very great. I paid $16.05 for those. I dumped those this morning for $2.58. Directionally move on this, and the reason why is I'm kind of a believer now with Tesla. They've lowered price on some of their models. They got 100,000, or actually 100,000. Sorry, Miss Arb there. 100,000 units moved in this last quarter. They came out with a nice profit, as you can see here. That was a real surprise to me. So all of those things being said, they are way ahead of the game on autonomous. And there are a lot of companies coming out with new electric vehicles. We don't really know how those do. I mean, Tesla has proven itself now to not just be a niche company, that it actually could be a real sustainable company. So people love it. And despite the fact that they don't have very many different looking models, who am I to say? They're doing very well, and good for them. They are looking like they are going to be sustainable. eBay, I'm still holding on to right now. looking to get out of this trade. I went into the November and sold the 37 puts in there. As you can see, those 37 puts are well tested, but I did this in the longer duration. It's not working out right now, but I'll be looking to get out of those pretty soon. I don't think I want to hold on to eBay forever. Like I'm gonna ride out the McDonald's trade. Like I said, I put in that strangle on there, so I've capped my upside a little bit, but increase my break even to the downside. So holding on to McDonald's, but I don't think I'm going to hold on to eBay. Looking for more of a bounce. It came up there really close to 37. I just wanted it to actually touch that Fibonacci, and that's where I was going to get out, but didn't come through for me. So I'm playing around with that trade and have a working order on it today. All right, sorry for running so long today. I'm really blabbing off about all the economic data, but I think that that's important for us to kind of disseminate and really digest. So anyway, today's webinar is going to be on the long put diagonal, you guys. That's a really great one for long-term bearish sentiment. Maybe we'll put that on for eBay or something like that. We'll talk about all the ways to build this strategy out so that our implementation is setting us up for the best possible success. All right, so check that out. Go to protraderstrategies.com and sign up for that. Also follow us on Twitter at ProTraderStrat. You can follow me there at Wolfman's blog. And finally, Facebook is really where we're starting to push out a lot of content. So check us out on Facebook at ProTraderStrategies.com. All right, if you can't take that, whoa, I missed. If you can't take that, take it easy.